Hi everyone, and welcome to this episode of Money Moves. Today I want to talk about commodities. I've been talking about these quite a bit here, and I feel like I'm a little bit late to the party, but commodities have been on a very strong run this year, and it seems like it's set to continue well into next year. Then I'll go through some of the commodities that I'm looking at closely. First here being uranium, I've talked about in the last couple of videos. Then we have US steel here, clearly in a very strong bull market. We have silver here, a little bit less clear, but still looks like we're on a solid breakout from this longer term downtrend. And then we have some pretty clear ones here with ExxonMobil, as well as SLV. SLV has had a pretty strong down move here of somewhere around 30%, but then we had a very strong bounce, and we're coming back into this nice little buy range right here in the high 20s. Then I'll go over each of my investing accounts, starting with Worthy Bonds, GroundFloor, Fundrise, my TSP retirement account, my M1 accounts. Then I'll go over just a few option positions in Robinhood and Tastyworks. Then I'll go over my monthly tracker. Of course, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this, as well as individual stock reviews or technical analysis every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Looking at this article, let's see why they say commodities are going into a bull market. They say the NASDAQ is up 7%, Dow Jones 13%, and small caps up 19%, but commodities are up more than 30% this year, and this is just the beginning of what people expect to be a longer bull run in commodities. They say over the long term, stocks have walloped commodities, and you can see they're down just about 4% versus the S&P 500 being up 430%, while commodities are down 4%. But times have certainly changed. The Rona has made it significantly harder to meet demand, with supply slowing down, if not stopping altogether. Demand dried up, meaning that nobody wanted to produce the things that they needed. But now that demand is speeding up, it's making it significantly harder for suppliers to meet that demand, which is pushing up the prices pretty dramatically. All of the major players, to include gas, oils, chicken, corn, bacon, even hot dogs, have gone up pretty dramatically. Then they use gold as an example here, where a gold miner can make an ounce of gold for about $1,000 and then sell it on the open market for $1,500, but they could wait even longer and sell it for $2,000, which will eventually lead to a ramp up in production to help supply that shortage, which may eventually lead to an oversupply, but it's hard to predict how long that's going to take, and for now we've seen commodities continuing to trend upwards. Moving over to the charts here, looking at URNM, this is the Uranium Miners ETF, and you can see we've had a little bit of a sell-off here, something that I actually talked about in my last video, but the expectation is that we might come into this mid-range around $80 a share, or even if we broke through that, we would come down to around $60 to $65 per share, somewhere in this range, and that would certainly be a very good buying opportunity in my opinion, which would present upside of somewhere around 70 to 80% over the next several weeks. Next on the list, we have American Steel, ticker symbol X. Again, we've had a little bit of a sell-off here, not too bad. Found a nice bottom, and then we had a pop on earnings, and it seems like there's some pretty good upside, somewhere around 90% or so, until we see significant resistance to where we've had significant downturns before, meaning that this is a very strong risk-reward play. Next on the list is silver. This one is a little bit less clear. We have a significant downtrend that we just broke out of and a shorter term uptrend, meaning that we could be breaking back into this longer term bull run that we saw around a year ago, which was a very large run all the way up to somewhere around $26 per share, $27 at the high. And since then we had that low right around $20 a share, and we've had a nice little pop of around 11%. And if we zoom in here, you can see we've already had a little bit of a correction, meaning that I think we're going to be in a very solid position to see a little bit more upside until we see resistance again around that $26 level. Next on the list is a classic, ExxonMobil. Been in a very strong bullish trend throughout this year. We had lows here in October, November of 20, and since then it's been basically straight up. Currently hit around 100% upside, And as oil continues to trend upwards, it seems like there's potential that we could see at least another couple percentage points until we hit resistance, around 5 or 6%. But either way, this is still a bull trend, even if there's not quite as much risk-reward benefit here as there are on some of the previous trades. Another good player for this is SLV. Again, similar pattern here, pretty solid correction, nice bottoming formation and rally, down a little bit off of that recent rally. And I expect that to go back up at least to this line, which is around 20% from where we are right now over the next month or so. And then we have Southern Copper Corporation, SCCO, pretty solid downward trend over the past couple of months of around 30% downside from the highs. But it seems like we have a nice little double bottom forming, which would create this long-term trend of support. Pretty close to that level again. Just a couple percentage points off of that recent high. And if we do find support, there's certainly some potential for upside, maybe 30% or so until we see that next level of resistance right around $74 per share. And just to round it out here, we do have gold producing a similar short-term bullish pattern to what we saw. The past several months have been pretty choppy. If you sold the highs and bought the lows, you'd be in pretty good position. But this double bottom that we have here at the 161-ish level seems very solid, with a nice move up of around 5%, with a potential to see somewhere around 11% upside until we hit those recent highs of around $178 per share on GLD. Moving over to my personal investments. Of course, if you like any of these platforms, make sure you use the affiliate links in the description. It gets both of us some free stuff and it really supports the channel. Otherwise, starting with Worthy Bonds here, you can see still keeping around that $6,000 level, and it continues to generate 5% interest every single day, otherwise no changes. Moving over to GroundFloor, you can see I'm almost up to $6,000 here, and looking at my individual investments, you can see I'm expected to get around 10% returns after all of these notes are paid back. But we do have some notes that they have changed from default to extended, meaning that they're still planning to pay these back, just on an extended time scale. And in theory, that should generate additional returns and no risk to my portfolio. Otherwise, I continue to invest in my normal pace, $20 per note, primarily focused on C notes, which are right around that 10% level. Taking a look at Fundrise, this is one of my bigger accounts here at almost $43,000, just over $6,300 in returns from the time that I started this portfolio, and I'm currently on track to get to my goal of $500,000 by 2041. Otherwise, looking at my newsfeed, you can see they continue to pay back projects successfully and acquire new projects throughout the country, and it's nice to see what they're adding to my portfolio over time. Otherwise, I've talked about this quite a bit, and check out my most recent videos to see how Fundrise is doing over the last quarter. Moving on to my TSP account, I haven't really changed anything here. You can see all my account values in government securities, a small amount in fixed income bonds, the S&P 500, as well as the total stock market index. My returns over the past 12 months is 26%, and I'm currently just buying stock in this portfolio, as you can see here. Moving over to my M1 Retire account, you can see real estate has actually moved into one of my highest valued sections, and this is because I think real estate is going to be a pretty good hedge against inflation, which is partially what's driving up commodities. I'm still playing that inflation commodity growth game as the economy moves closer and closer to being fully reopened. Otherwise, industrials continue to do well, and telecom continues to be the lagger for this portfolio, but still pretty good returns, up almost $600 over the past month. Moving over to my higher yield savings account, also close to $550 over the past month, which is kind of surprising since this is a less risky portfolio. But let's see what's doing well here. So we have VUG doing very well. Realty Income had a very strong rally over the last month. Cymer Property also did very, very well. So real estate holding its own again here in this portfolio. Bonds doing significantly less well. Long-term corporate debt did okay, and this group of bonds did okay also. But really, these indexes as well as real estate have been the strong performers. Moving over here to my Robinhood account, not a great performance over the past couple of months, up a little bit over the past month, but still not that great. Otherwise, looking at the year, you can see just over the past few months, I've kind of been stuck in this around $11,200, and that's basically right where I'm at right now, ever since I hit that level in around May of this year. So pretty flat, generally underperforming the market, but that's okay. Otherwise, looking at my portfolio right now, in DraftKings, uranium, oil, Robinhood down quite a bit after earnings. Zynga, SLV, again, not looking super great. Pinterest down quite a bit since it was announced that they will not be being purchased by PayPal. Snapchat also down quite a bit, as well as Trade Desk. I did accept some shares of SLV I was assigned, and I do expect that to rally. If we do see a strong rally, I'll start selling some covered calls on that position, but for now I'm just going to hold it. And then Nerds, this is an IPO that's being offered to Robinhood. I might add some money to this portfolio just to try to buy some more of these shares. I do really like this company. I think it's an interesting business deal, and it's something that I want to add to my portfolio over the long term. Be aware, if you do an IPO through Robinhood, you are not able to sell those shares within the first few months. Otherwise, they will penalize you and not sell you those IPO shares in the future. Moving over to my Tastyworks account, you can see pretty stable, still at that $51,000 level and around $14,000 on my IRA. Down still a little bit year to date on my individual account, which is surprising considering how bullish the market has been. Otherwise, looking at my individual positions here, you can see I'm bullish on the Russell 2000. This is the full size contracts, so they are pretty large, which is why this is a credit spread. Otherwise, bullish on Boeing. This one hasn't been a great performer for me, but my break even is down around $190 per share, which I think is a pretty good buy point for Boeing. Disney, again, not great, but still well within my profit range. My break even here is $160. Did buy some Ford shares after their very strong earnings and sold some covered calls against them. Otherwise, you can see same trends here. Gold, I have the gold miners and then gold by itself. And then I have American Steel here. Looking at that position, I want to buy it at $23 if possible. And then we have gold down here at $165 and GDX at $130 per share. Down a little bit, but I've rolled this position several times, and that's why I'm in some profits right now. Moving over to my monthly tracker, you can see stocks rallied this week. So did my trading account. REITs a little bit flatter than they were over the last month, just because I had a very strong month in Fundrise last month. And then everything else is as you would expect. Bonds basically flat, Lending Club down, and cash up just a little bit because I'm at the beginning of the month right here. And that will come back down to my normal level, somewhere around $7,500 or so in available cash. Over the month, I'm up just over 5%, including my income for the month. And a lot of that money went into trading here as well as stocks. Let me know what you think of inflation and the commodity markets going forward, or should we just continue to buy the best companies in the S&P 500 and hope that the stock market goes up forever? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future content. Of course, none of this is financial advice, this is all for entertainment purposes, and with that, let's get to the jelly. So today's jelly is Gordon from Dodgeball. This is a classic movie, but it's a little bit of a different take as they've added the Doom music to the background, so let's see what that looks like. It almost seems like that music was made specifically for that scene, and I thought it was hilarious, so definitely comment down below what you think of it, and go check out the original in the comments. And go check out the original in the description. And with that, have a great day.